And if we pop in and look at silver, again, this is October the 2nd, looking at silver, although NSFR compliant silver has also been dragged lower, the focus was clearly on trying to trick out as many CTAs holding 96% leverage gold futures bets as possible, really impacting silver. However, with far less silver flowing through London, the Asian-facing physical markets are setting the price. And if we pop onto the weekly charts and look and to eliminate the immediate chart chatter, we're most definitely seeing silver, as I say, breaking out. So note the highest fix since December 2012.
The precious metals markets are experiencing a remarkable transformation, with silver emerging as the standout performer in recent trading sessions. Silver has climbed 2.8% to $32.71 an ounce in a stunning display of strength, marking a remarkable 37% gain year-to-date and achieving levels not witnessed in over a decade. This exceptional performance comes when the broader precious metals market navigates complex dynamics and shifting economic indicators. Silver's resilience has been particularly noteworthy, despite facing downward pressure from the liquidation of leveraged gold futures. According to veteran precious metals trader Andrew Maguire, this strength is primarily attributed to robust demand from Asian physical markets. The metal's recent performance marks its highest fix since December 2012, a milestone that underscores the significance of the current rally and hints at potentially deeper structural changes in the market. Meanwhile, the gold market presents a more nuanced picture, continuing to set new records while simultaneously grappling with various challenges. Recent economic indicators, particularly in the employment sector, have created headwinds for the traditional safe haven asset. September's jobs report revealed stronger than anticipated wage growth, with average hourly wages increasing by 0.4%, surpassing economists' predictions of a 0.3% rise. Market participants closely monitor several critical developments, with particular attention paid to central bank buy traps and trends in premium outflows. Adding another layer to this complex situation, lower U.S. interest rates have spurred increased gold buying, especially in Asia, with rising incomes in China and India playing a key role in supporting demand. Meanwhile, geopolitical tensions, particularly the potential conflict between Iran and Israel, are intensifying safe haven demand, further driving up gold prices and solidifying its importance in the current market environment. Before we begin the video, please subscribe to our channel and hit the bell icon so you never miss an update.
Now, the crumbling structure of the Comex casino telegraphs the last tool for the Fed to manage the price of gold against the dollar is failing. And given that foreign exchange gold markets and related derivatives are estimated to be around $70 trillion when you add in all the derivatives, it leaves the Fed two choices: allow the Comex to default, spiking interest rates, or to revalue gold higher against the dollar. And if we pop in and look at silver, again, this is October the 2nd, looking at silver, although NSFR compliant silver has also been dragged lower, the focus was clearly on trying to trick out as many CTAs holding 96% leverage gold futures bets as possible, really impacting silver. However, with far less silver flowing through London, the Asian-facing physical markets are setting the price. And if we pop onto the weekly charts and look and to eliminate the immediate chart chatter, we're most definitely seeing silver, as I say, breaking out. So note the highest fix since December 2012. That's not going unnoticed. This is also the breakout point where we've said that where the short stops exist. They've managed to pull it back a little bit, but really a breach through that, and we're now going to move into what we discussed last time, the 35s and then the 40s. And this explains the battle at the rapidly contracting December to spot contango, which is spot $32. The round, it's roughly equivalent in this futures chart to $32 is approximately 32.28, and we've seen that being gamed. But this spread is about to shrink. It'll shrink to either par or backwardated to spot by next month. So to illustrate just how stressed the cartel is finding themselves, we captured up to a 24-cent spot premium in the in-delivery October contract on Monday as Indian buyers lined up at the back door, a Comex store, to load out their longs. We talked about these guys being very active in the silver futures markets because simply you can't trust anything that can move, because it's not NSFR compliant. Anything that EFP into London, you can't trust, can't trust remains as an unallocated position. So this means that all these positions that flowed out at 24 cents premium to this October contract that was expiring, they were underwater by $1,200 a contract. Now, as far as gold and silver are concerned, given Chinese Golden Week runs into a very likely a politically gamed non-farm payrolls beat on the 4th of October, on Friday, we should expect some additional short-term volatility, but this depends on where we identify where the central bank buy traps have been set. And there are two. And one has already been triggered and is in play. And the one that's in play is this one here. And we've identified them a long time ago, and we laid them out for each one by one, they're being blown through. So 26.50 spot equates to 26.68 or thereabouts in gold futures.
Gold continues to demonstrate remarkable strength in the precious metals market, achieving a historic peak of $2,668.90. While futures have reached an impressive $2,787.00, according to veteran trader Andrew Maguire. This surge comes as investors seek safe haven assets amid escalating geopolitical tensions and anticipated Federal Reserve policy shifts. The yellow metal maintained its robust performance, climbing over 1% on Thursday and stabilizing near $2,660 per ounce on Friday. This sustained strength reflects growing investor concern over signs of economic deceleration in U.S. data, reinforcing gold's traditional role as a safe haven asset. Technical analysis suggests several key levels that could define gold's next moves. The immediate challenge lies at the static resistance of $2,670, which, if breached, could open the path to the previous record of $2,686. Maguire reveals plans for an innovative 40% gold-backed stablecoin platform in a significant development for the gold market. This initiative stands out for its unique feature of zero counterparty physical gold backing, potentially revolutionizing how investors interact with the precious metal in digital form. Let's get back to the interview.
Day after spot gold recorded an all-time record high, and that was at 26.68.90. That was the record high AM fix, that is. Last Thursday, that was, which we illustrated, also printed an all-time gold futures high at 27.0870. You saw that on the charts. What I did was I met with a very large first-tier liquidity provider, who is one of only 4 liquidity providers gearing up to provide initial liquidity into this BRICS-facing mBridge platform. Now, this reaffirms that the estimated necessary liquidity has been secured, sufficient to at least kick off trade on this historical game-changing platform after the Kazan meeting. Now, what is being missed by many skeptics as we approach the launch date of this platform, of this, I have to make the point, globally fungible 40% gold-backed stable coin token is backed by zero counterparty physical gold. It has to be understood. Given this platform has front-run several other initiatives also yet to roll out, including Glaziev's beta-tested gold-backed commodity currency that we've been tracking for about a year and a half, it's no coincidence that the BIS had positioned itself long gold ahead of reclassifying gold as a first-tier asset class in January 2023, well ahead of its debut launch on the 22nd of October upcoming. Now, all that was missing to benchmark thousands of tons of accrued BRICS gold reserves to ultimately control the price of all currencies and assets has to be understood. This is big enough to do that. it needs to be sufficiently liquid, and this sufficiently liquid decentralized utilizes a non-dollar denominated gold benchmark. So this BIS sanctioned mBridge 40% gold backed stablecoin is readying to launch in just actually when you get this on Friday, it's just 12 global market trading sessions away from when this, as I say, from when you get this. And as explained to me, it is sufficiently liquid to provide the growing number of BRICS members and the current growing 49 nations that applicants that want to join. And bearing in mind, we're talking about, this is a group who either produce or consume 85% of all global. This needs to be liquid enough to provide the necessary alternative sanction-proofed, de-dollarized means of exchange that they all seek, especially as we move into election uncertainty, sanctions, and really most worrying, unprecedented geopolitical escalations that risk dividing East from West, or worse, World War III. Now, while the US is fighting the launch of this de-dollarizing platform, for obvious reasons, we have been following you remember we looked in the last couple of episodes, we looked at recent US carrot and stick attempts to rein in the Chinese BRICS gold anchor. However, these efforts absolutely ignore the fact that the BIS diverged from the Fed's dollar gold suppression scheme at the moment they revalued gold as a first-year asset class in January 2023. So it's really, they're on their own. So we've also been reporting that every single first-year bullion bank has also been going long for their own book since March 2020, when the risk of playing this 50-year long old spot asymmetric short Comex price suppression scheme, it blew up, if you remember, into COVID refinery shutdowns.
Gold's recent record highs highlight its enduring appeal as a safe haven asset amid economic uncertainties and geopolitical tensions. Meanwhile, silver benefits from these dynamics, demonstrating unique market behavior while responding to industrial demand. As both metals navigate these pivotal conditions, they increasingly serve as critical components of investment strategies, presenting opportunities for investors to capitalize on market trends. What are your predictions for the performance of these precious metals shortly? Share your thoughts in the comments. If you found this information helpful, please like and subscribe for more updates on the gold and silver markets. Thank you for watching. Stay tuned for more insights.